don't have to be a sci-fi fan to recognize that robotics, automation, and artificial intelligence are penetrating nearly all aspects of business and life. It's everywhere. The question is, what's the best way to profit from this trend? Welcome to ETF Battles. I'm DeLegge, and boy, have we got a great matchup for you today. It's a showdown between two robot AI-focused ETFs. We've got the ROBO Global Robotic and Automation ETF, that's ticker symbol ROBO, R-O-B-O, versus the Global X Robotics and Artificial Intelligence ETF, also known as BOTZ. By the time this battle is completed, we're all going to be drenched with an oversupply of androids and algorithms, but who's complaining? Before we go any further, let me just tell you why I like ETF Battles, besides the predictable antics, because this program teaches you to ask questions and to have a process before you invest. So even if you disagree with the final battle outcomes, the process of identifying and screening investment opportunities, that still stays with you. And someday if I or anyone else, or maybe even your twin alter ego, challenges you about a certain investment choice you've made, hopefully you'll be able to defend that investment choice confidently because you have a process. Helping us to judge today's matchup is Mike Akins, CEO at ETF Action, and Dave Kreinces with ETF Portfolio Management. Judges, welcome back to the show.
Thanks, Ron.
Thanks, Ron.
So we've got four battle categories, which are cost, diversification, exposure, strategy, and performance. We're going to go through each one of them one at a time. And at the end of the program, we're going to declare a final overall ETF battle winner. So my scorecard is ready. As you can see there, it's blank. We've got our shot clock, which is also ready. And so we're going to begin with Dave, and we're going to start with cost. You got 30 seconds, go.
You know, Ron, the cost on Robo is 95 basis points, and for BOTZ, it's 0.68%. So it's an easy cost savings. The win on cost goes to BOTZ.
All right. Mike, what's your take?
Not so fast, my friend.
All right.
When you look at cost on thematic ETFs, it really comes down to does it capture what you want? So absolutely, from a total cost or an actual expense ratio perspective, there's a healthy difference there in ETF land. But when it comes to actually investing in strategies, at the end of the day, what matters most is security selection. And BOTZ, which charges 68 basis points, has 36 securities, and it dominates, it's market cap weighted. So it owns the largest of those companies. So for example, NVIDIA and Akins make up over 20% of the portfolio, whereas Robo has 87 securities, pushes much further into small, mid-cap names, names that you wouldn't find in your core positionings of your portfolios. Obviously, it does it at a 95 basis point expense ratio, but from a total package perspective, actually gets you a pure play into the space. So I'm going to give the nod to Robo.
Okay, our next battle category is diversification. Mike, who wins the battle?
So just following up with the comments I just made from a diversification standpoint, with BOTZ, you're looking at 36 names and you have 65% of your portfolio in the top 10 names. So really you're buying 10 stocks and then what's left over. With the Robo, you're getting 87 stocks in a tiered equal weight manner. So from a diversification standpoint, it's a no-brainer. You're getting more exposure to mid-cap, small-cap names, and you're getting a more diversified exposure to all kinds of different companies participating in the robotics and AI space. Clear winner for me is Robo.
Dave, your analysis on diversification. Who wins the battle?
You know, I agree with Mike. Robo is clearly more diversified. BOTZ does have the extra Japan exposure, and I do like the extra exposure to NVIDIA, but BOTZ is more concentrated, so Robo wins the diversification.
Okay, the next battle category is exposure strategy. Dave, tell us your thoughts.
These are both robotics and AI ETFs, so the performance is going to be the much bigger metric here. So for strategy,
I hate when you say that.
I'll call it a tie, split decision.
Okay, split decision. I hate split decisions. I always like to see someone get beat up. Okay, what's your take, Mike, on this particular category, exposure strategy?
So I think this is a great example to talk a little bit about why it's so important to look under the hood of an ETF. both of these ETFs, robotics, one's artificial intelligence, the other one's automation. So there's a little difference there. But in general, they're claiming to capture the same companies. But if you break down the portfolio and looking at this chart here, what you'll see is despite being 103 unique companies between the two strategies, there's only 20 names in common between the two strategies. So it sheds light onto this idea of the arbitrary nature of the methodologies that go into these portfolios and the real importance of understanding what you're buying. So back to the exposure strategy concept. I like NVIDIA, as Dave pointed out. I think it's a great company. I like semiconductors in general. But if I'm looking to get exposure to global robotics and artificial intelligence, I think I want to go into those companies that are getting pure revenue from that perspective. I'm making an active call on that macro sense. And NVIDIA is going to get a lot of its revenue just from chips in general. So that perspective alone, from a capturing the intent of the strategy, I'm going to go with Robo on exposure and strategy.
Okay, our next category is performance. Mike, take it away.
Performance, despite these portfolios being remarkably different, only having 20 names and 27%, which, by the way, that is a big number. And when you're dealing with equities in general, there's a high correlation. So once you start diversifying out, it's not uncommon to get similar returns. But these two portfolios are right on top of each other since common inception. I believe Robo has a slight lead, but comes with a little bit more volatility. I'm just going to have to give it a coin flip. Other than the fact that Robo is capturing it with a pure play, so I'm going to go Robo anyway.
So Robo is your performance winner for this category.
Yeah.
Okay, very good. Dave, you're up.
You know, Ron, it's rare that we split, but neither of these two ETFs have been trading for 10 years, so the data is limited. But again, like Mike said, the performance is comparable. Robo fared better in the crash of 18. It has slightly better 1 to 3 year returns. But I'll give the performance win to BOTZ because I just love NVIDIA. So I'm going to go with BOTZ.
And because you're a contrarian. Full disclosure.
Keep it interesting.
So let's
I'm not sure buying NVIDIA is a contrarian play. I think that might be more of a momentum play, but we can leave that for another battle.
Very good. So now we've moved to the final part of the program where we're going to let our judges give their overall recap and overall winner between these two ETFs, Robo and BOTZ. Dave, you've got the microphone.
So Ron, for me, Robo, won on diversification, but BOTZ wins the battle. It's slightly better performance, the extra NVIDIA, and overall, I just want to say that both of these ETFs are interesting for technology exposure, but I would still favor the NASDAQ 100 over both of these ETFs. NASDAQ 100 just passed 100 billion in assets, and the 3 times NASDAQ 100 TQQQ, which is unbelievable. We recently named that ETF the American Dream ETF because it returned 43 times your money in its
There
first
you go
decade.
again with unrelated ticker symbols. I'm going to have to put you in the penalty box.
That's a story for another battle.
I'm going to have to put you in the penalty box for 5 seconds again for disorderly enthusiasm.
But we are talking technology ETFs here.
Okay, very good. So who's your overall battle winner between BOTZ and Robo?
Yeah, so I would asterisk that it's TQQ, but I'll give the battle win to BOTZ.
Okay, very good. Mike, what's your take?
So it's interesting. I think one of the things we say at ETF Action is that ETFs are just tools, right? There's some of their parts. And how good is the tool at getting the job done? And when I think about investing into global robotics or artificial intelligence and trying to capture companies that are generating the majority of their revenue from that theme, then I think clearly the better tool here is Robo. That does not equate to the better investment. At the end of the day, you still got to do bottom-up analysis on the companies and see what you're buying. Look at the macro environment. Look at your valuations. Understand the fundamentals and the quality of the balance sheets. All of that good stuff, and that's what we do at ETF Action is provide tools to do that. But thinking about it from a perspective of I want to get exposure to this theme. These are both thematic ETFs. I have to give the nod to Robo simply because it is pushing into more companies that are primarily related to the robotics and AI space. And it's doing so in a weighting capacity that gives you more exposure to those pure play names. So overall winner is going to be Robo.
All right. Well, that does it for our judges. They have weighed in. And so the question is, who is today's ETF battle winner? Well, according to my scorecard, this, folks, is a split decision. It was a split decision on cost. The only category really that our judges agreed on was diversification, but everything else in terms of the analysis was exactly the opposite. And so that's sometimes what happens with ETF battles. We have opposite views, opposite opinions, and sometimes it winds up that we've got a split decision. So that's what we had today. But again, put both of these ETFs on your watch list, Robo and BOTZ. I think we've given you some good stuff to work with, and at the very least, a starting point for further research if you're looking at investing in automation, artificial intelligence, and robotics. Keep in mind, ETF Battles was made possible by viewers like you, so please support us by subscribing to ETF Guide TV, our channel, and spreading the word with your friends and with your colleagues. So which ETF battles would you like to see in our next episode? Post your thoughts on our YouTube comment section or hit us up on Twitter, #ETF Battles. I want to thank Dave and Mike, our two guest judges, for doing a great job as always in helping us to judge today's bout. And thanks again for watching ETF Guide TV. I'm Ron DeLegge, and until next time, watch the battle before you invest.